Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, markets seem to have decided China isn't doing anywhere near enough to reverse their economic challenges. But first, Fed boss Powell has been presenting the central bank's semi-annual monetary policy report to Congress today, and in testimony he said nearly all FOMC participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. He suggested that another 50 basis points could come by the end of 2023, taking their policy rate to 5.75% and taking it higher than even the rates that applied before the GFC. Bond markets ignored the comments, but the currency markets marked the US dollar down. Equity markets dipped too. The American mortgage market activity rose again last week from the prior week, an unusual expansion even if it was minor recently. Mortgage interest rates slipped slightly with their benchmark 30-year rate down to 6.73% plus points. There was also a rise last week in a key retail sales indicator, but despite that it remains mired deeply less than inflation surge. And Canadian retail sales surprised in April with more of a gain than expected and reversing out March's dip. In China, equities dropped rather hard across the board yesterday after a smaller than expected interest rate cut by their central bank. The pain was especially felt in Hong Kong. Shanghai dropped too, as did the tech hub Shenzhen markets. But other markets exposed to China are feeling the pain and impacts as well, like Australia. China's yuan is weakening fast again. It is down to 7.18 to the US dollar, a 1.4% devaluation since the start of the month and a 3.1% devaluation since the start of the year. Against the New Zealand dollar, the devaluation is 3.8% since the start of the month. In the UK, their CPI inflation held at 8.7% in May when a fall was expected. Month on month, it is running about the same annualised rate, so they aren't making any noticeable progress there. Worryingly, their core inflation rate actually rose in May from April. Markets are now expecting more rate hikes there soon. And the US Treasury 10-year yield will start today little changed at 3.72%, and the price of gold will start today down another $2 at $1,935 an ounce at a new 3-month low. But oil prices are back up $2 from yesterday, now just over $72.50 a barrel in the US, while the international Brent price is just on $77 a barrel. And the Kiwi dollar starts today at 62.1 US cents and up a half a cent from yesterday. Against the Aussie, we're a half a cent firmer too at 91.3 Australian cents. Against the euro, though, we're little changed to 56.5 euro cents. That means our trade weight index is now just on 69.9 and up 50 basis points from this time yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.